How's it going, everyone? Welcome to the weekly trading review for the week of February 24th all the way to February 28th. As usual, we're going to start with just the market, what happened this week. I'll give a summary of my trades, and we're going to go through some of the trades one by one. We'll talk about the setups, we'll talk about the entries, some of the rationale that I had while thinking through the trade, and then ultimately why I decided to exit, what improvements I could have made, what I do well, and so on. So this week, or this last week of the market, because I'm recording this on a Monday, beginning of a new week, we started off from this long red candle off the all-time high on heavy volume. I've taken off some of the indicators just so you can kind of see the price action pretty clearly here. And from this point on, we could still be trapped in a range. We've seen long candles kind of get gobbled up, and we've seen a bounce usually after these. So that's what we're kind of thinking through later in the week. Got a little bit of follow through here. And here now we poked through. We got that 50 SMA over here, had the 100 SMA over here, kind of poked through there. And finding a little bit of support, kind of chopping around here. So we're stalling out over here. And then we get another nice long red candle before almost a bullish engulf that takes us back to the 100-day SMA. So here is the sign of lots of volatility. A couple things you'll notice here: very long ranges, very high volume. Sellers have a ton of control, and we have not seen a move like this in the charts, right? We had a little bit of something here. The volume was much lower. Price action was a little bit choppier because buyers are still engaged here. But we've had some time now since the election. There's been a shakeout period. The market has been in a relatively horizontal range. Lots of marginal new highs here, here, and here. So we got a triple top with these marginal new highs every time we hit it. First time we sold off hard in this choppy bearish channel, and just a whole bunch of patchy price action. Very low odds trading, but every day of low odds patchy price action means we're closer to a day of high odds directional price action. This is the feeding grounds for trends to emerge. Let's look back at the chart very quickly here and just see if you can notice any very big long red candles, high volume, lots of red days, right? Obviously coming off of that reversal, maybe a little bit here you can see, but not to this extent off the all-time high. The candles, we had one long red candle, a little bit of follow through, lots of tiny, organized, medium-sized green body candles over here. A little bit over here. We had some selling over here that was decent. Just scrolling back here. Now we're in 2022. Maybe I'll put up the indicators. Oh boy. A little bit too messy, but I don't want to put the indicators up right now just because there's so much going on. All right, we had a little bit coming off over here. This is where we rubbed off a longer-term high minus trend line, gapped up, and sold off hard. So something like over here, okay, pretty decent. Something like over here, but we haven't really seen something like that since this move here back in 2022. We got some long red follow-through over here. So you see that, okay, when we actually start to get some, here we go, here's a crack down, a little bit of follow through, crack, right? Okay, now we're seeing something that's at least somewhat comparable to what we're seeing now, following another period that is very comparable to what we're seeing now. Light volume rally, we get some big crack here, there's some selling pressure, we get a little bit of chop. It's not as patchy as what we saw earlier, but we got a double top here, marginal new high with no follow through. We get a crackdown from the relative high that we would expect, and then instead of a bounce that is able to get it back, we see a big crackdown over here. So let's go all the way back to our chart over here. But I wanted to start off with that by just saying that this is a move that you should be aware is not a common move. This is not a move we have seen for quite a long time. Lots of long red candles here. So first thing to catch your eye. Okay, now let's zoom into this. I'll do an M30 chart first because I like looking at that over here. All right. So here's the long red candle of the 21st. We get a gap up, test that 50 SMA, bounce over here. We crack through 50 SMA, test 100. Okay, so we know that this is selling pressure. Now we grind up all the way past the 50, or I think that was actually right to the 50. The 50 has moved because market has been moving lower. So this is kind of around where the 50 was, as well as 600, which is resistance, psychological level. Come back down over here, compress here at the 100-day SMA for a while. Then we get this crack through late in the day too. It's not an early day move like we saw on the 21st. Late day move, try to bounce, failure, late day move. And we even saw that today on Monday, which is, I guess, cheating for this video. But late day move, ignore these bad prints over here. Compress, late day move. So sellers are very much in control right now. Just zooming out of this chart, we got a series of higher highs and lower lows. Now, this bounce here, we got a first bounce, got smacked down. We got a much stronger and taller bounce that also got smacked down. So we're definitely in a wider bearish channel at the moment. But sellers are very much in control. So you have to be very careful trading on the long side, in my opinion. I think there'll be a good chance to enter on a bounce. But there are some opportunities to trade on the short side, and that's where you should be focused on. So I'm going to start with the 3 swing trades that I took. I took 14 trades this week, 3 swing trades, 11-day trades. I didn't take any non-directional trades like an earnings time spread. And a couple things, the number one thing I noticed when reviewing my position size this week is that I had 1, 2, 3. I had 3 shorts out of my 14 trades. So 11 trades were on the long side. Now, actually, sorry, that's actually incorrect because I had 2 put lottos that are characterized as long. So 5 out of my 14 trades were on the short side, but still, that's not quite enough. I was waiting for these bounces and looking for a double bottom to try to get long. That's what I was kind of watching. I did take a couple of shorts, but that ratio should have been flipped. So why was that ratio not flipped? And I want to talk about this a little bit before getting into some of the trades because that mentality is kind of underlining some of the decision making that I see in some of the setups. Well, we have to zoom back out to this D1 chart. So when we get this move lower, right, we get a big chunk lower. Typically, the market will find support and it'll rally back. That's what we've seen in our range, right? We have big moves with no follow through. So where you want to enter is when we start to see buying off of that move. There's typically a follow through. So we're pivoting, right? You're just ping ponging back and forth. You're in, you're out, you're in, you're out. So that's why I was so squarely focused on this long side here. I said, okay, in or out. Now, this I do notice this is some heavy selling pressure. We've seen some follow through, and then I knew that okay, on this kind of day on the 26th, I was thinking, well, maybe I can take maybe I can take a couple of longs here. The market is probably going to have a little bounce from the 100-day SMA. Nothing too crazy, but it might last 1, 2, 3, maybe 4 days, right? Maybe a couple days of this bounce. That's what I'm predicting. If you take something like this or take something like this, copy paste it here, that is what I'm predicting. A weak bounce that gets up to, maybe not halfway of this, even half this candle. Let's kind of fall short of 605 here. That's what I'm predicting in my head. And I didn't want to feel like I'm chasing a very, very bearish move. Then we get this candle that cracks down very, very hard. And this is what got my attention because typically I would expect to see some support of the 100-day SMA after falling this hard, and then some sort of bounce. Because if I put up then I know this chart is super cluttered here, but let's just focus on the 100-day moving average, which is here, right? We don't test it frequently. Tested it once here, gap down, bullish engulfing candle that filled the gap, another gap down, higher low, and then we jump off. This is a CPI result reading. And then we actually fuels a new bounce to a relative high. That's often what you see when on these big moves. We get the move. These sellers here, they get squeezed out and pushed up. And the move kind of feeds on itself to propel it to a new relative high. So when you see this, right, with some follow through, and then we finally got a bit of a double bottom and then a push up over here back to 100 SMA, this was a big sign for me that says, all right, now we're really getting something that's not super typical, because up till here, this is definitely a stronger, more strong bearish move. But if this bounces up again here, you'll be thinking, oh man, this is a great buying opportunity. I should have bought it, over here when it's starting to find a double bottom off that 100-day SMA. No, we got that crackdown. So this is a big warning sign, and this is what's caused me to readjust my focus for, the next couple months. Okay, so now we got that out of the way. Let's look at some of these trades. I'm going to start with the first one that I took from last week, which was PLTR. So this one was a bit cute, I will say. Now, PLTR, if you look at the D1 chart, here's where I entered. I took the 228, 106, 110 CDS for $1.71. I took it right here. And my rationale was like, all right, look, we got this crack. PLTR is a very strong stock, and we had support at this gap. Ton of volume coming in here. I actually day traded this long for a nice little win. And I thought, all right, well, look, there's a chance it might bounce up. Try to test this this AVWAP over here at 110. It closed at around 106. So I have some time over here. I have a little bit of room to take a small win. And this was on February 20th. So let's zoom in. I take this at the end of the day. And this was the market at that time. So I'm like, all right, look, market probably just going to not do much, maybe chop around. It might pull back, but I think it should be able to hold something. So next day we get a big, nice crackdown in the market. And I like PLTR here. You see that it actually did not engulf the prior gains. It held the room at 100. So I'm thinking, all right, look, don't love the market here, but it's been choppy. We're likely to get a bounce. And PLTR, it'll get held pretty well. So on any sort of bounce, should be able to hit my profit target. Not sweating at all. We got a little bit of fall through, and then I see PLTR gap down and crack down over here. So now my spread is completely toast, right? It's like 80% loss at this point. And look, if I take a max loss, I take a max loss. That's, not worried about that. But I'm thinking, all right, well, what do I have to do? How can I win this trade right here, right? Is there any way for me to salvage this trade? And we've seen a little bit of fall through selling. I'm thinking, all right, well, look, we've seen some fall through selling. PLTR, I could challenge the 100-day over here, but I'm just going to kind of hold on to it. And, market's probably going to bounce sometime soon. So my best chance is just to take a smaller loss on any sort of bounce, potentially even retest that 100-day SMA. I'm trying to lean on the strength of this daily chart on PLTR. And the fact that if I'm a long-term buyer, this should be a very attractive deal for me, right? It should be attractive to buy a very big stock at $100, or even at the 50 SMA, or even at this red line is the election AVWAP, at this prior line over here. So it should be attractive levels for some buying. See a little bit of follow through, and then PLTR tests that 100-day SMA, but it closes the week pretty bearish as it cracks down, and you see it loses that relative strength on this day and never quite gets it back. So the mistake I made on this trade, a couple things. First was on this trade, if you look at this M30 chart on PLTR, I think this is going to tell, this is really the autopsy that you have to do, is I took this trade here, trying to trade a bounce. I never got this double bottom higher low. And that meant I was catching a falling knife on PLTR. Now, the other thing too, when I took this trade, that's the first important thing. The second thing was that if I go back to that day, and I think actually the best way is to go in this chart here. So bear with me. There's going to be a lot of lines here. I'm going to try to clean it up as best as I can and just make it nice and simple. Let's go to this M5 chart, and I'm going to scroll back a couple of days. All the way back over here. So here's our drop, and this yellow line here is the AVWAP from the prior day. So I have that set up on my chart. So you notice that after this drop, this stock rallies and rallies and rallies. It breaks through the high of the day. I'm going to make this a little bit bigger so we can see. Rallies and rallies and rallies, right? So I get long somewhere here. I think I talked about it in my last video. Breaks through the high of the day, and it hits a little bit of resistance that's prior to AVWAP. Then on the next day, right, it can't crack above it. It's kind of waffling around here. It can't crack above it, and it's kind of drifting lower. It gets kind of dragged down by the market, but you can see how it's resisting a lot of that pull for most of the day. But it can't get above that level. And now this is a descending level, which means that as this stock goes lower and lower, so does, my stop on this stock, and eventually cracks down to the 100, cracks down through the SMA. So I have a resistance that is coming lower and lower to price. It's the same way as a high minus or a low plus trend line for shorts. That is putting a ceiling on my profit. And because we didn't crack through that, I didn't have a prayer of getting up to 110 where that AVWAP-E was. So that was my second thing. We didn't clear that resistance quite easily enough, and I was on the wrong end of the market. So that was PLTR. Reiterate a couple things. One, was catching a falling knife on that intraday chart. Two, didn't, and I guess number two, I got the market wrong. And three, it did not clear that resistance level quite convincingly. So that was my mistake on PLTR. Second one that I took was Tesla. I took this on Monday. Let's look at this chart. I took this on 224. Here we go. So here is Tesla on 224. And I took this at the end of day at 345. The 330, 327.5 PDS for 105. So this is the setup on Tesla. Here was a setup on Monday. And I was just looking for a quick move to test this horizontal level. I think Hari took a similar trade, and I wanted some exposure on the short side. So let's go all the way back on this Tesla chart. All right. So as the Tesla chart kind of bounced up of this level of horizontal support, and this actually comes in much closer to 325, where this line is over here, and we're just fading this bounce in this much longer term downtrend over here on the stock. So figured, look, nice little overnight play here. Get in. It broke through VWAP, rejected off EWAP. Get in and take some gains over here, keeping my debit pretty low, and my reward is higher than my risk. So the next day, I don't see the market initially. So I actually had my order to take maybe 30% on this if it hits that level, and I missed that order. So as luck would have it, it cracks down through that level with a bunch of heavy volume, and I exit at the close of this candle right here, and it took a 70% win on that guy. Now, pretty nice, but if you look at this price action, this is pretty damn strong price action. So as Tesla's roaring lower, let's look at the market here. Market gaps up and is testing that 50 SMA. Yep, right about here. And so when it approaches that 50 SMA, I should have done two things. One, I should have waited for the market to at least test the 50 SMA at 10 o'clock. So that meant holding it somewhere over here. Or two, wait for that double bottom at 10:55 when the market starts to rally off, 10:55, 11, 11:05, because this is a strong trend, and now you can see it's starting to see there's long green candles, right? And it's starting to bottom out and go a little kind of flatten out a little bit after this very steep drop, especially here with this long volume little candle. Take gains somewhere over here. So I took gains kind of up over here, and I had all this room to let go. And this could have been probably 100% win. So I'd say, look, the pick was good, and I got a little bit lucky in that it didn't reject off this level because we had the market kind of tailwind right and favoring the short side. But considering the market, the exit, what the market was doing at the time, and what the stock was doing at the time, I should have held it for a test of that 50 SMA. So that was Tesla, and would have actually ended up being a complete winner had I held until the end of the week, given that it tested the 200 SMA and my CDS would be expire worthless for a full profit. All right. CI. So I took CI long on February 25th, and let's zoom into that notion here. Here's what I saw. We tested 100-day SMA, kind of stalled, and we spent the whole day rallying. I thought this move was decent, and we tested over here, kind of poked up above it, and closed right on it. So I felt like, look, this is a decent enough bounce. We've had quite a bit of selling, and we've been in this choppy range, so I expect the market to, probably stage some sort of little bounce here, make some sort of action. CI at the time, healthcare stocks were very strong. It had made double bottom, higher low, higher highs, broken through the 100-day SMA, out of a compression break. So I really like this setup in the stock, and I felt that even if there was some downside, there's a lot of money flowing into healthcare, so it's a good stock to, it's a good sector to be long in. So CI next day closed below that 100-day SMA, and I took it at the end of the day. I took it at $3.14 or $3.14 exactly. A couple things on CI was that I believe there was a high minus trend line coming into play around 3.15. Yep. So there's this high minus trend line coming into play here. It also broken above this AVWAP coming into play over here. So I missed this high minus trend line, but I felt like, look, on a market breakthrough over here, a market bounce, this stock has been so strong that it has a pretty decent chance of clearing it and getting back up to the 200 SMA up over here. So everything was going, kind of fine, according to plan, not super worried. Now we get this kind of poke down here on the 26th, and then we still close back above the SMA. And then what I'm thinking here is like, all right, well, look, I knew we'd get a poke lower. And so far, it looks like we're making a higher low, getting above that 100-day SMA. So seems like some support is starting to form. Next day, we get another little test. Okay, we poke above it for a second, but then we go back above. So we still have another double bottom. And we're kind of just chopping around, compressing here, not doing too lot. We have it's getting a series of higher lows today. And then this move is what catches my attention because this is a pretty big move to the downside. And at this juncture, I'm thinking, well, okay, now I kind of don't know what the hell the market's going to do because I thought this was the bottom, right? But then this move told me we're definitely not there right now. And maybe we bounce after this. Maybe we don't. I didn't have a clear sense. So I looked at CI. I said, look, CI is holding pretty well, but the market has been volatile. I've not been in sync with the market. It might be because it's transitioning. It might be because it's changing. So I'm going to exit this long. I'm going to take a step back. And it might still work out. Maybe, but I don't have the confidence in the structure of the market that I once thought I did. And especially because I know that transitioning from a horizontal market to a potentially bearish market is going to be volatile. It's going to be big moves, lots of ranges. Selling pressure is heavy initially. I don't want to deal with that. So it did recover the next day, and that was a better chance to take an exit. So that might have been a better place. I could have even actually scratched out of the trade or exited for a tiny win today on the 3rd. You can see tested that trend line very early and then got smacked down and actually held up pretty well, all things considered, given that the market had sold off today. But I didn't have the market confidence, and that's kind of why I bailed on this trade. Maybe I could have taken a better loss on the close of this SMA or even on the close today. But I'm not going to fret about that too much. I'm going to focus more on the fact that the market didn't do what I thought it was going to do. And that was the main reason why I closed the trades when I did. Okay, so now that we've gotten the swing trades out of the way, we're going to take a look at some of these day trades, and we'll go back in time chronologically all the way to the 24th, and we will work our way there. So first one here is Hershey. Took Hershey on the 24th. Here is the D1 setup on Hershey. Again, this is a defensive stock. Staples, lot of money inflow or sector rotation into these defensive sectors. So it felt pretty nice, pretty confident in the D1 pick. Now, it's not the strongest D1, but what I like is the very nice head of steam it has here. It's cracked through all the SMAs. Again, while the market has been going down, the volume has been pretty good. A ton of relative strength. Has room to the 200-day SMA. So as a swing trade, would not take it. But as a day trade, I like it and has a nice amount of room. So let's zoom into this M5 chart. Okay. Oh, I think I went back a little too far. So here's Hershey, by the way, when the market was selling off on the 21st. Super huge rally. So we're getting some follow through from that rally after a pullback. And I enter Hershey right here at 11:10. And when I enter it, here's the market also at 11:10. Let's go over one more candle. Okay, so this is what I'm seeing here. Market down, double bottom, higher low at the 50 SMA. It hasn't cleared VWAP yet, so I'm going to keep an eye on that. But Hershey has been very strong. It has compressed and it has broken out to a new high of the day over here. This is a strong move now. It is a strong move, but I like how it had this little compression. We broke through it pretty early. The volume is really good. We're all just trying to think there were some issues early. That's why it's flat. But it had nice. But I mean, you don't have to look at this indicator to see that it has relative strength. The indicator is for searching, but you can just see the relative strength in the price action of the chart. So this is where I took it right here. And my plan was, look, think there's maybe $1 in this trade. SPY will test VWAP. Maybe it'll crack above it. Maybe it'll waffle around. Maybe it'll break above and just kind of meander. Maybe it'll reject off. But I had a feeling that we had a decent chance of cracking through here, and for Hershey to continue up on the upside. So next trade here, I get a bearish engulf off the high of the day with follow through, key bar through this prior low over here, through the 8 EMA, HA reversal, bearish. And what does the market do? Market moves up higher to VWAP. So now I'm thinking, look, either I exit the trade right now, or I wait for a pullback to VWAP, add, and I go back in. And then I thought, all right, which scenario do I really want to do? And I decided that I don't really want to hold this trade when the market hasn't confirmed above the SMA. I needed to see some really strong price action on Hershey that gave me some cushion to stay in the trade, right? I know I'm taking this trade a little bit front running here. We haven't had a strong move off VWAP with volume, so I don't want to get too crazy, too spotty here. trying to average in or average down the position off a bounce off of VWAP. So I'm just going to take the small loss here, and I'll reevaluate the conditions. If it might set up later off of VWAP bounce, then I'll take it. And if it doesn't, that's fine. I can also find another trade. So took the loss right here very, very quickly when I saw this pattern. If I'm in a long, this should not be happening, right, on this pattern. And I knew that my entry on this ticker, it felt good because this is decent price action. It's a little bit chinky and choppy, but again, this is a staple stock. It's not going to have Tesla-like price action. You can see it moves, kind of grinds up. There's a mix of all different kinds of candles here. So that was Hershey. And if you evaluate what happened afterwards, we got a little bit of a bounce over here. We got the VWAP test, poked through it a little bit, and then we staged a bounce up over here. Market for the rest of the day kind of rallied up, but this is a weak, low-quality rally. Not a lot of movement. It's kind of in this M5 bullish channel here. Breakout, retest, breakout, retest, breakout. We get a double top, lower high. So not a whole lot in Hershey, and then it loses its relative weakness while the market's going down. So I don't like to add on bounces when the stock is relatively weak. Now over here, got a double bottom, gain some relative strength, so maybe I would consider taking a play here. But at this late in the day at 210, not also crazy about that, and hasn't really done a whole lot. So as a day trade, I like my exit. I think overall, look, there's a little bit of place where I could have taken a slightly better exit, but I took a pretty good exit on this guy overall. And I could maybe save 20 to 30 cents if I really got super precise or something like that. Now it did break it the next day, and I could have taken gains on this rip up, but I was only holding a day trade. Market was still bearish, and look where we closed, right at the 50 SMA on Monday. So I'm not in the business of holding swing longs in this kind of market. All right, so next trade I took was on the 25th. So only one trade on that day, considering that we had this move early, and then market kind of just died late on the day. It didn't really do a whole lot, so didn't really want to mess with that. I took two trades on Tuesday. One was SPY. So I took a day trade short at 203. So I took it right around here. And here's what I saw. One, we got this strong move through the 50 SMA. Flat open. We got a little bit of move up, flat open, crack down here, flat move or strong move earlier, bounce, marginal new low, rallied up higher, rallied up through VWAP. A crack down to the, not a crack down, but some selling to the 100 SMA over here. We had a green candle here, no follow through, started to stall, and then we started to eat away at some of this green candle over here. We broke through the halfway point. So ideally, I think the better entry would have been maybe a couple of cents higher, but I like this entry here. And I'm just looking for quick dollar on SPY to the 100 SMA, which was actually, I think, a little bit lower. I think it was somewhere over here. 100 SMA and to VWAP. So take day trade short, 15 shares here. And, take the gains of this long red candle, and I'm in, and then I'm out. So was fine with that trade. It was a nice little win. I didn't want to push it because, again, we're at this major resistance. We're at VWAP here. We know that buyers have been engaged, so want to be in and out, and then focusing on other trades on either side, really, depending on what the market is going to give me. So the next one I took was MSTR, and I took this on the 25th over here. So here's the setup on MSTR. Was a nice little opportunity to day trade. Had some root of the 200, had cracked down as well. Saw some heavy selling the past couple of days. All right. So this is where I took MSTR right here. So I took it right here, and here's where I like the stock. We had a gap and go, so it's kind of choppy here. Tested VWAP, and then we just kind of chopped around here at the low of the day for a very good chunk of the day while the market was rallying up. So that's why I like this setup. And then at 210 we cracked down, and we're at the 50 SMA. So I'm thinking, all right, look, we cracked down here, but I probably want to see if we at least hold this crackdown because we're at the 50 SMA. So if the market bounces off this 50 SMA, then there's a good chance that we might just reverse back into this little compression range, and this trade is dead. So I wanted to wait. So over here, I see this little red doji, and I see this spy of a bit of a tail here, but I'm thinking, look, this is crypto, gonna be a little divergent. Probably have a chance to, as a root to 100 SMA, I have a chance to take maybe like $5 on this trade, maybe $6 if we get a nice long red candle following through. So I offer up over here, I don't get my fill, and then eventually I have to end up offering over here at 244.40. So I get filled somewhere over here rather than something like 246. So now I'm already giving up $2 on this trade from kind of chasing it. And then we get a little bit of bounce, and we start to engulf back on this candle. So right over here, I see this close, and I'm thinking, all right, major warning sign. We kind of suck back into this range over here. Market also had bounced up at this level at the 100 SMA, and I take the loss right over here at 252 because we got a strong move back in the range, and we could hit VWAP and reject, but again, what's the market been doing today? Well, after establishing this low, it has been rallying up today, and it's been holding that 100 SMA so far. So had to take the loss on MSTR, and we got a big pop over here, and then it ended up coming back down to close at the end of the day. But again, this is only a day trade, so it was a no business trying to push that to an overnight. Take the loss when I did it, confirmed above it, and didn't think twice. All right, let's look at 226. So here's 226. We got a little bounce over here. And I took a day trade short on SPY at 135. So I took it right here. Yeah. I took it and got it right here. So when took it at 135 at 594.17. Again, this 100 SMA was probably a little bit lower. It's probably somewhere over here. So we had a room to that. And my plan was to take gains at this 100 SMA at around 593. Now, we had this bounce up. Test. So a couple of tails here, struggling to get above this $600 range, which acted as resistance. 50 SMA was also a little bit higher. Cracked down below that range, below VWAP with follow through, and we had some decent selling. Here's the low of the day, test. Long red candle through that low of the day. And then on this candle, we preserve half of this candle. So that's why I set my stop or my short at the close of this candle. I think I got it somewhere here because it held, and we're probably going to have some follow through to the downside. And I was willing to hold through moves to the SMA because we have a decent trend here with some volume, and I was leaning on the stop of this long red candle, or this open this long red candle as my stops. If it was breached, then I consider taking the loss and then reevaluate the trade, maybe try to short on the next failed bounce. Okay. So what I did was I pretty much took gains fairly quickly at 150. It hit at 393.20, so took just under $1 here as we're approaching the SMA. And there's a little bit more to squeeze out of it, but there are some kind of smaller candles here, a little bit of overlap into the bodies, and we'd already had a big chunk of the move here. So these trades, look, I'm in and I'm out. I get my dollar, and then I'm out of the trade. That's just how I construct the plan for these. Next trade I took was FLYW. So this stock is it's a gap fill reversal trade that been, I think I take maybe usually one a week. I feel like I've been finding and taking. It's not a common wiki play, so I don't post them in the chat. But typically when you have a big gap down here, there's an opportunity to trade for the long side if there's certain conditions and certain price action that you can see. I only recommend day trading it because you saw what happened to PLTR on a similar kind of move. Big drop. Oh, let me just swing it. Yeah, there's support in. Boom. Bottom falls out. Get the market wrong. I'm not in the business of doing that. I guess I'm in the business of doing that exactly one time. But generally, I'm not in the business of doing that. So here's FLYW. Couple things to notice. Or let me first start with some of the criteria for a gap fill reversal. The first thing is that you have a massive drop. It can be higher or lower, but lower usually works better, I've found. Massive drop that's typically over 10% of the stock. You have an insane R volume, and with that volatility, usually volatility over 300% if you look at this volatility column, and you're going to have volume and R vol that is something like above 3. So actually, let me see if I can find one in the search today. Here's a bearish example, but see, something like I caught ALGM today. So I see, all right, massive change to the upside, huge volatility, huge volumes. This might be a good candidate on the bearish side, which is a big gap up, and then it starts to sell off. So that's what I saw on FLYW. Now, these have so much volume that they typically will ignore the market. Typically. But it all depends on the price action you see. The other thing, too, is that these gap fill reversals will tend to hit a little bit resistance at the prior day's AVWAP. So here's FLYW. Get this massive drop down, and then I'm going to go to this chart here. So it grinds up, and it compresses for a little bit, dips below VWAP, finds some support, and then it starts to gain some relative strength over here, and it cracks above this high of the day. So I take this stock at 135. So I take it almost about the same time as this, which is interesting because I'm short SPY and I'm long this stock. But I knew that this stock so far is not caring about SPY. Why? Because from 1225, from 1220 to 120, this stock is rallying. From 1220 to 120, SPY has sold off on some decent volume and some decent price action. So it's going to hold the door, especially with this insanely high R volume that is coming in. The more R volume the stock has, the more likely it's going to resist the market because more and more of the action is being driven by buyers of that particular stock rather than what the market's doing. So I enter here at half size here, 1081. I get in at because I figured, look, the market's going down, so it's probably going to drag in and retest this level, which is at 1080. So I can probably buy it in somewhere around this level. And then we get a poke below this level, which is fine. And then we get a candle that tries to test the top of it, but then it fails, and then it ends as a bearish hammer. So over here is where I decided to scratch out of the trade at 1080 because what I saw here, let me see if it's going to look so tiny on the on this chart, but I'm going to try to make it a little bit bigger. Basically what I saw here is, look, we didn't get in it quite as fast as I wanted to. And I know I'm going against the market. Market's learning that SMA. So I'm like, I'm just going to scratch. When you see really nice, tight, orderly price action, then it's going to resist it. And that's going to happen when the market's a little bit more bullish. But so far, the price action for the day has been a little bit choppy. And when it kind of starts to stall over here, right, we're not getting the trend that we need to see. I need to get out of the trade. So scratch out of that. And I was thinking, look, I'll send alert to the upside. If it sets up again, I'll get into it. If not, then I'm not really sweating it too much here. So it does end up pretty much almost testing that prior day AVWAP over here. You can see it comes in as a kind of a descending little ceiling. And And you could have taken the pop there if you're willing to hold through this little pullback that seems like it's breaking through support. But I'd rather scratch out of the trade and not have to deal with that. Okay, so that is the action on Wednesday. Let's look at the action on Thursday. So Thursday, I take 2 trades, and I take them with perhaps the worst timing, but that is part of trading. So setup for this day, we get this move lower, right, on decent volume, and then we get a tall bounce higher, and we're just seeing some back and forth chop. We're kind of wedging here. We get lower highs and lower lows. Markets chopping around VWAP as well as the 50 SMA, or the 100 SMA, which I believe was a little bit higher that day. It was actually right around that VWAP level. So I wasn't really in the business of taking anything too much. But over here is when I decided to get long for a couple of reasons. One, on this wedge here, we actually had broken the wedge kind of to, in my opinion, the upside is what it felt like. If I were to draw these lines here, we have this line coming into play here. I draw this line over here. I'm thinking, all right, look, we're kind of breaking it to the upside over here on this wedge. And we've kind of holding above VWAP here, not able to knock it down. So see this little bullish hammer. All right, look, the volume's a little low, but I've seen this pattern before. That's what I was thinking in my head. And if I go to SPY, let me see if I can find the right day for this chart. Oh my God. Sorry, this is a massive mess here. We're going to hide drawings. Okay. So I have seen this chart over here on 1120. So let's look at this setup, because this is the image that had flashed through my head. So look, we see SPY had a big drop. That was a D1 context. On the M5 chart, I saw this move lower. We saw these stock make some higher highs here. And then eventually we had a big pop up at the end of the day. So I thought we would see a very similar thing on this day. That's what I was trading here. So I thought, all right, look, I'm going to get in before this big pop. It's confirmed above VWAP, so I don't feel like I'm really trying to catch a bottom here. It's put in some higher lows, and we put in some higher lows over the past couple of days. We sort of stalled out at this level, digesting some of that selling pressure. So I'm feeling good about my entry. I'm close to the stop, and just for good measure, I'm like, look, worst case scenario on this trade. Worst case scenario, let's say I get a series of a whole bunch of red candles that break the low of the day. I got to size it for a move that I could even test this low, because it could happen, and a break of this low. So I got to size this to where if this hits like 588 or something, then I'll get out of the trade. So that's the loss that I sized it for. Pretty wide stop, considering that, look, we still haven't seen that move yet, so I can't get crazy with it. So I take SPY right here, and what happened was exactly that worst case scenario. And right over here at 3 o'clock is when we poke through here, and then I think we kind of stall out. We don't snap back immediately in that range. So I take the loss at the close of this 3 o'clock candle. And this was kind of the clue here. So we get this strong leg down, right? Now, volume, price action looks decent. So far, I'm like, all right, look, we get a little bit of volume, nothing scary. Now it starts to pick up a little bit here. I'm like, all right, it looks like we're going to crack through this low of the day. And so we cracked the low of the day. Big candle, long tail. Here we are testing this low. In my head, I'm thinking, is this going to be a marginal new low? Or are we going to see some follow through? And I'm thinking here, well, look, we've seen this like sideways compression kind of day, and we see this move that looks kind of exaggerated, right? Really sold off, dropped really hard. And again, I've seen this move somewhere. I've seen this big drop that it gets exaggerated really hard, and then we snap back into the range. So what I'm looking for is a bullish engulf that happens fairly quickly in the next 1 or 2 bars, right? Maybe 3 bars that eats this up pretty much, go back in the range. So I'm taking all this heat, and I'm at this point I'm still not worried, or I guess I don't think I'm going to take the loss. I'm like, I might take the loss, but there's a good chance that we might still poke back in that range. So I see this candle, high volume, little doji. I'm like, all right, look, we're stopping out over here. We get a little poke below. Don't love that. Okay, another point here. This time now, time's ticking. We should have bounced, right? We should have bounced. We're holding the halfway point of this candle. We get another bounce. I'm like, all right, look, now we got to actually start to bounce over here, right? We've kind of, maybe we've soaked up some of this. We stalled out over here with these high volume dojis. Volume's really kicking up over here. Nope. And then crack. And as soon as I saw this crack, I'm like, all right, I got to get out of this trade, because this is no longer just triggering some sell stops and snap back. This is selling and unloading a whole bunch of shares that are unable to retrace half of this candle, and we get some follow through selling on the rest of the day. And then we eventually get that bounce on Friday where I had a chance to maybe even scratch and take profits if I wanted to hold it overnight on Monday, but was not expecting this move. So took the loss here and took the max loss on this position here. And I think what was important was that I had a pretty clear game plan on a worst case scenario. And so when it happened, I kind of knew exactly what to do. And yeah, look, it sucked to take that loss because I was like, damn, I was not expecting that move. But it wasn't like I was totally knocked off my heel, right? It wasn't like I had no idea what to do. Is because when you start with the worst and then you kind of build your case up for that, very rarely do I get the worst, but occasionally when I do, I know what to do. So that was the case in SPY here. The trade that I took also at the same time was RTX on the same exact notion that I explained for SPY. Which was that, hey, look, RTX, SPY doing nothing, RTX looking strong, grinding up, testing VWAP, broke through the high of the day over here. So took it right here at 155. So I did take it a little bit later. I took it, right over here. So poked through the high of the day. I'm thinking, all right, look, this is looking pretty decent over here. RTX SPY red candle, RTX green candle, new high of the day, getting relative strength, some nice volume coming in, good buy signal. Now I know it's a little bit choppy, so it might retrace back, but I'm okay with that. As long as this condition holds where we make higher lows. That was my condition on the stock. And market starts to sell off, right? And we start to break through this trend line, and that's my first sign. I'm like, all right, well, hey, market not really making those higher lows anymore at 220. And RTX is holding up pretty well, but it's starting to get pulled in after 220. So if I really wanted to, I could have been extra conservative and scratched, but I figured, look, this is a strong stock. I'm going to wait and hold it. Comes in and tests VWAP, and it holds up really well. So I have a great pick. I should have started with a D1, which is my bad. So this is RTX right here. You can see it had some nice follow through after that. But it held, right? Breaking through this downward sloping little kind of bullish flag over here. There's the flagpole. Bit of a choppy stock. There could be some sector rotation here. I don't know if these kind of aerospace and defense stocks are consumer defensive sectors or not, or maybe there's a news play here with all the geopolitical information. But regardless, I don't really care. It's just a nice setup with good volume and good technicals. So that's why I took it. We poke over here, test the VWAP. I was fine with this because, look, we have tests here. They poke below a little bit. Wasn't crazy about it. And then we come up over here and had a chance to maybe take a smaller loss here. But I figured I'd hold it to the end of the day because I was watching for, all right, well, look, we got this move here. We got some choppy candles. We might get a little end-of-day bounce, and then that's when I can take my gains. We didn't get the end-of-day bounce, so ended up closing it ended up taking the loss at the close at 131.40, And this was day trade long 70 shares at least. So this is like a 1/4 size position for me, where my max loss was $75. So yeah, that was RTX. And look, again, I had a great stock pick, great stock D1, good stock M5, but I got the market wrong. I was not trading. Well, at this point, I thought I was trading with the market, but I got this move wrong, and it held up really well, all things considered. And look, on a swing basis, it would have ended up holding out, but was not in the business of swing trading, and especially as I mentioned in that earlier trade with CI, I didn't really know what was going to happen with the market. I didn't have a clear sense probabilistically if we were going to drop hard and bounce, maybe bounce up and then drop hard, maybe we'll flatline. I didn't have a clear 70-30, even a 60-40. It felt very 30-30-40 percentage splits on 3 different scenarios in my head, because this move was something that I thought was much more unlikely, and it ended up happening. All right, so that was RTX. Taking the loss on that, fairly small loss. Next day, 28th. So SPY has a poke down, bullish engulf, and has a bit of a rally here. Pokes down below to VWAP, and everything kind of looking good early in the day. So a trade I took, and I posted this in the chat, was MMM. So I take MMM. I think I like this breakout, on the 28th over here. Now, it had broken through some of these levels, this downward sloping trend line. It had some room to this high at about 155. So, liked MMM. Again, defensive stock. I knew that these defensive stocks they're good longs. They're really nice longs for defensive stocks. So I take MMM at 1050 right here. We have a break of this. We have a little bull flag here, like the downward sloping trend line right here. We're above VWAP, and we're also off the SMA on a nice long green candle. So take it at 153.79, full size position. I'm day trade long, 100 shares of this stock. Wiggles and jiggles over here. Now, market at 1050 was here. So market's bullish, stock is bullish, but stock's a little bit more bullish. So like MMM here. Now, we get a poke down, which I was fine with, and then we get a new high, and I was thinking, well, maybe should I take some profits here, a tiny win at 1220. And market still, it didn't look terrible here, but what I also saw was, look, well, we got the strong move down. We got a double top lower high. We're testing VWAP a couple of times quite frequently. And there's a little bit more decent volume on this side. And this trend is not going to end like a V, right? We're probably going to get another test some point. So I'm like, do I want to hold through that test, or do I want to just take the small win now and then reevaluate? And I decided that, look, I'm going to hold through this test because I am confident in the stock. I liked how it made a new high of the day while the market was going down. That's something that RTX was unable to do. So it told me that at least this trend was still intact for the time being. So we get this leg down to the low of the day, and then we get this poke over here, and then we get this bullish engulf with some nice steadily price action back to VWAP. And this is what I see here. Now, I end up taking the small loss over here at 140. And I think to understand this loss, I probably have to talk about my trade in ENPH, which I also took. So with ENPH, I will flip to that trade on that short side here in just a second. But the TLDR for that trade, and I'll explain in more detail in a second as well, is that I messed up my first entry, and so I took a small loss, and then I got a great second entry, then I scratched out. And if you notice the theme with my other trades, there's been a lot of uncalibrated moves with my market. The trades that I've been taking have not been aligned with the direction the market's going because it moved in the way that I didn't forecast it to move. And so I felt out of sync with the market. That's sort of the main theme after the move on Thursday. And some of the trades earlier. If I look at Hershey, I expected something didn't happen. If I look at my two SPY trades ended up being pretty well. MSTR, I shorted at the low of the day, had that nice breakthrough that I typically like, and then it snapped back in. So I felt, okay, was also uncalibrated there. FLYW I scratched out, so it didn't really matter about that. RTX, market sank lower, and then RTX I had to take the loss on. So I was kind of in this position where I kind of feel out of sync with the market. I don't have a ton of confidence. And at this point, I've also sized up. So I mentioned that I talked about that earlier in the video, but I sized up, and then when you size up, it for me, I've noticed that it takes anywhere from 1 to 2 weeks, depending on how big the size up is, for me to sort of recalibrate my trading with the market. And if you pair that recalibration with the bigger moves, the crackdowns, the increased volume and volatility and ranges that we've seen, it had me decently emotional at the end of the day. I was very pissed because at this point I was sort of emotionally spent on this trade on MMM. And I was like, look, man, the emotional side of me was using some TA to justify the rationale by saying, look at this triple top that's happening in MMM. You got to get out because triple top means it's going to reverse and you're going to lose. You're going to take a much bigger loss. So might as well take a small loss at, what was it, 153.58. Take the small loss here. Otherwise, you're going to take a massive max loss of $150, and you don't want to take that because you've already lost money this week. So that was the emotional part of me that was saying it. In my heart of hearts, I saw this and I thought, look, marginal new low, strong price action. If this low of the day holds, we might get that move I talked about on 11.20. We might get this sort of move. That's what I was thinking in the back of my head, but I was emotionally, I was out of points. I was out of bullets emotionally. And had I not been so spent and so uncalibrated and so taken back, I would have been able to actually hang on to this position, add to this position on this breakout, and then take gains on this position. This could have been a really nice winner because I got a great entry over here. And I was even thinking of adding at 130, but I missed my entry point over here. So got a great entry in this position. Could have added, and could have taken some really nice profits on MMM. But did not happen. Because at this point, actually, I left my screen after, at 140. I left my screen and I missed all this move because I was too spent to consider trading for the day, and I was too kind of emotionally hot, which I noticed that it really has very rarely happened to me. I think the last time it really happened was probably sometime in October of last year with similar sizing up concerns. So it's a barrier that I sort of have to overcome. And I'll talk about that at the end of the video. And also I'll probably talk about why I sized up as well at the end of the video. But let's just finish off these trades right now. So here is, so that was MMM. I entered here. This is a nice D1 chart, and I took the loss somewhere here. So pretty much took a scratch on this guy, and that could have been a nice winner. The other trade I took that ended up being a winner was AIG. So here's this D1 on the 28th. So it had broken through this level and was kind of grinding up higher and broken out of this range too, right? There was like a whole bunch of horizontal resistance and downward sloping trend lines and all this kind of junk over here that had to crack through much earlier in the day. So looking at this M5 chart, it also had a big pullback the prior day. So big pullback, getting in, big pullback, and then it finding some support at VWAP, and it was starting to grind up. So I took AIG at 125 right here, and right off of this bullish engulfing candle. And my move was, look, I don't know what's going to happen, but I'm like, in my head, I needed a win as a confidence boost. So I'm going to take over here, take some gains at the high of the day, and call it a day. Now, if I wasn't so emotionally spent, this was a trade that I think Dan and Dave took took some lottos on this, but could have entered here, could have added here again, and then I see this high volume doji, right? I'm probably going to start to get out of the position. Yeah, this is the trade. Yeah, when I see this big bearish hammer on volume, okay, get out of the position, right? And I got a 3x position that I've taken, $1 on for my initial entry over here at 131.38. Big initial trade where take a massive win as I ride this guy out. So yeah, there's another one where, again, if it wasn't necessarily that my entry and pick were great, my plan was fine, it wasn't a bad plan, but it was the fact that because I was emotionally spent on prior trades, I couldn't adjust that plan to some of the new scenarios that could unfold in the market, and I wasn't calibrated to now how the market is now moving in these past 2-3 days versus how the market was moving in the past 2 months. All right, last 2 trades that I took. Was ENPH. So I called this out in the chat pretty early in the day. Delete these lines here. So it had some support. So I called it out somewhere over here. And it had some support at 50. I believe it was 53.33 or something like that. 58.33. So it needed to close above that level because there was some D1 support. But let me put that up somewhere right over here. And then here's the other support that was hitting at. But it looked good. Now market rallying up higher and higher. ENPH, long red candle, and moving lower. Nice compression that preserved half of the gains. Moved lower, bounced up. So I knew there was choppy coming up over here. I didn't want to chase on a low. I want to enter right after a bounce was starting to fail. That's when you can ride it out. So that was the stock M5 setup. On the market, I was thinking, hey, look, man, I've been kind of on the wrong side of the market this whole week. I feel like it's going to bounce at some point, but yesterday I thought the low was in and it wasn't. So today I'm not going to do the same thing, and I'm going to try to favor the short side when I can. And I won't be opposed to taking the long side, but I need to also be comfortable trading the short side here. So we get this move lower, and then I'm kind of waiting, and I take a lotto short. I take the 58 put lottos over here for 32 cents, which was about a fourth size position. And then I exit right over here at 12. Yeah, exit somewhere over here for 18 cents because I was like, you know what, man, I actually didn't. This wasn't the entry that I wanted to take. I needed to see it kind of really stall and crack down here or hit some level. I didn't get that. So I re-entered the position. So this was a 40% loss on a quarter position. So not a huge loss. I re-entered again here at 12.35, and this is the one I posted in the chat. And this is the one I felt, all right, I feel good about this position because I got this long red candle through compression at 12.35, and look at this market starting to crack down over here. I got my double top, so ENPH, it was looking good. And when I got this candle here at 12.50, now I entered the 58 lot of puts again for 23 cents. Again, tiny position. And then I scratch out of the position over here at 12.50 because I'm thinking, I've been wrong about the market. My confidence isn't high. I feel like I'm not calibrated. So this long green candle, I scratch out. And that was a mistake. because that was just having more conviction of the trade. I had a chance to take gains here or here, right? When the market broke through, we had a nice new low of the day at 120 or at 115. And even on this double bottom here at this double bottom higher low at 155, what does ENPH do? Massive move lower here at 157. So that I had a chance to take some massive profits at this time. So a couple positions where it's just like I have a good pick, I have a good entry, and when I get a bad entry, I take the small loss, right? But I have a good pick, good entry, and I'm just so uncertain about the market that I don't let the pick breathe, don't let it run its course, and that is a sizing problem. That is a sizing issue. So those are all the trades I took this week. It was a red week for me because of that calibration, because of that sizing, and I want to talk about why I decided to size up at the end of the video. So when I was looking at my returns for this month, so as you know, this challenge is about doubling my 30K account to 60K. And by the end of, or beginning this week, I was up about 1% overall on my account. So I've been trading small size. I wasn't unsure. I traded some big size at the beginning, and then I gave some of the gains back, and then I was day trading one share because I was rusty. So, and I was thinking, look, we're in this big kind of choppy, chunky area, right? Like I don't want to be doing a whole bunch of random stuff here. But after 2 months, right, I'm only have a 1 or 1.5% gain. So I'm thinking, look, at my current trajectory, at this current base, there's no way I'm going to complete this challenge. The only way is I have to get a little more comfortable with additional amounts of risk. Now, if you watch the 2024 recap, I mentioned two things. I know, one, that I can win the vast majority of my trades, and I know, two, that I will not blow up my account. So I decided to shift my max risk and say, look, every trade, I'm going to try to have a max risk of 150, which is I cap out my max risks at $300 for a 1x position. So I'm not even at a 1x size here. I'm really just doing, half a position size here. But I am just, wasn't comfortable with taking those hits to the accounts and seeing the accounts move so much, right? Where if I'm trading and my max loss is $30, it's like, losing $30 on a 30K account does not move the needle, right? That's 0.1% of your account. But taking a 1% hit, right, or a 0.5% hit, it does matter because you're seeing a little bit more movement. But the only way for you to make money is to risk more money. There's no way to get around that. So yeah, I took some thinking on this. This is actually why I took an extra day, because I wanted to hash out all of the emotional aspects of this process, and to tap into some tools that I didn't expect to tap in, or really haven't had to tap in for almost half a year now, I would say. Yeah, not since October. So I chalk it up to, again, new market transition and size up during that transition. That's going to create some unexpected motions, but my plan right here is not to size back down, because that's what I've done in the past, and I have entered this cycle where I size up and then I size up a little too hard, and then there's situations where you do need to reel it back down. But in this case here, I'm treating this more like exposure therapy, where I need to get exposed to this amount of risk and maintain that kind of generally regardless of the market conditions, where I'm not mitigating risk by my position size as much. I will still take half positions and full positions and ads, right? Like that is still going to stay the same, but it's not like it's dwindling down to absolutely nothing. And I'm managing risk by more thorough and less trades or shorter durations, rather than teeny tiny baby sizes that don't mean anything. I have to be comfortable with having all my trades mean something, but not everything. That's the kind of the balancing act that I have to find for myself. So this is exposure therapy. I'm sticking with these sizes in these positions for the future, and that's the only way that I'm going to be able to double my account. Because if I'm trading with a $30 mask risk, there's no way I'm going to be doubling my account at the end of the year. And since I'm already behind, right now I have to make up, that $30K, but in 10 months versus in 12 months, right? So that's going to be $3,000 a month if you average it out. Now, I'm not super crazy about just $3,000 a month on the dot. There's going to be variability. There'll be some months where you might smash through it. There could be other months where you don't smash through it, but it's got to average out to that amount. All right, so that's my spiel here. I'm going to put some timestamps in the description as well so people can skip around to this talk. But thanks, everyone, for watching. Was a little bit longer than usual. As always, the weekly trade log is going to be linked in the description of this video that you can evaluate all the trades. You can see what I wrote down, what I thought, and hopefully it is helpful. And we will have a end of quarter profit business review at the end of the quarter, at the end of March. So stay tuned for that. But keep trading well, guys. Hopefully you guys made some money this week, and I think we're going to have some good conditions coming up on the horizon. So stay posted, and I hope all of your patience in the last couple of months has paid off. Thanks for watching, and I'll see you in the next video.